So imagine you're watching this roller coaster, right?
Yeah.
And it's been kind of going downhill kind of slow for like 3 days straight.
Sounds rough.
Yeah, not exactly a thrill ride. But then, out of nowhere, Tesla jumps into the front car. And suddenly, it's like someone hit the turbo boost.
Oh.
It's pulling the whole darn thing uphill.
Huh, that's kind of like what happened on Wall Street yesterday.
Exactly. It's like Tesla single-handedly shifted the market's mood.
It really is amazing how much influence one company can have.
And that is what we are diving into today.
Buckle up.
We're talking Market Deep Dives Report on October 24th, 2024.
A day for the books.
Oh yeah, a day of crazy swings, unexpected winners and losers.
This whole shebang.
All of it. So if you're an investor trying to figure out what the heck is going on,
Well, this deep dive is for you.
we're going to break it all down, starting with the big news.
Drum roll, please.
Tesla. They had a triumphant Tuesday, if you will.
Uh-huh. I like that.
Their stock shot up 22%.
That's huge.
Huge. Best performance since, get this, 2013.
Wow, someone was celebrating.
Oh, I bet they were.
So what fueled this rocket ride?
Well, they absolutely crushed their earnings expectations.
No kidding.
But it wasn't just about beating the numbers.
There's more.
They also showed some serious improvement in profit margins.
Oh, that's the good stuff.
Right. And for investors, those margins are a big deal.
Like a signal flare saying, hey, we're making money and we're doing it well.
Exactly. It's not just growth, it's healthy, sustainable growth.
Smart.
But here's the thing.
Timmy?
While everyone's obviously excited about Tesla's win, a lot of analysts are still, I don't know, a little cautious.
Hey, sense.
They're watching closely to see if Tesla can keep those margins up
Yeah.
and, deliver on those big self-driving promises they keep making.
Gotta walk the walk, right?
Right. You can't just talk the talk on Wall Street.
Words only get you so far.
So Tesla's not the only story here, right? This whole earnings season has been a bit of a roller coaster, hasn't it?
Oh, absolutely. We've seen some companies soaring high.
And some taking a nosedive.
Exactly. A real mix of winners and losers, which just goes to show how much these earnings reports can directly hit a company's stock price.
Makes you want to pay attention, huh?
For sure. If you're an investor, you better be watching those reports closely.
Okay, so spill it. Who are some of the big winners this time around?
Well, we had American Airlines, UPS, Southwest Airlines.
Travel and logistics looking good.
All reported positive earnings, yep. Good signs for those sectors.
Okay, what else?
Oh, and then you've got Lam Research, Whirlpool, and T-Mobile.
All exceeding expectations.
Giving investors a boost of confidence in tech and consumer goods.
So lots of positive momentum in those areas. What about the flip side? Anyone leaving investors feeling a little disappointed?
Yeah, unfortunately. Honeywell, IBM, and Dow Inc. all had some less than stellar results.
Ouch.
Which actually dragged down the Dow Jones Industrial Average a bit.
See, this is why I love these deep dives. It helps connect the dots.
Right.
You see how those individual company stories actually affect the whole market?
It's all connected.
It really is. But speaking of things that impact the market, there's another big player we got to talk about.
Ooh, lay it on me.
Rising Treasury yields.
Ah, yes. The bond market is speaking.
Treasury yields, okay. For those of us who, don't speak fluent Wall Street,
right.
can you kind of break down what those are and why everyone's freaking out about them?
Sure. So basically, imagine you're lending money to the government. You give them some cash.
Like buying a bond.
Exactly, a U.S. Treasury bond.
Right.
And in return, they promise to pay you back, plus a little extra, as a thank you.
That extra being the interest.
Right. And that interest rate, that's what we call the yield.
Gotcha. So higher interest means investors get a better return. Sounds like a good thing, no?
Well, it's not that simple.
There's always a catch, isn't there?
Kinda, yeah. See, rising yields can be a good sign. Like, it could mean the economy is strong.
Strong economy, good, right.
Usually, yeah. Means people are confident and they're demanding higher returns on their investments. But on the flip side, those rising yields also mean it's going to cost more for companies to borrow money.
And for regular folks like me, right?
Yeah.
Like for a mortgage or a car loan.
Exactly. Everything gets more expensive. And if borrowing costs go up too much...
You can slow down the whole economy.
Potentially, yeah. It could even hurt company earnings down the line.
Yikes. Definitely something to keep an eye on.
For sure. It's a balancing act.
So we've got Tesla's big win, mixed bag for everyone else this earnings season. And now these rising treasury yields adding to the drama. Anything else we should be watching?
Oh, yeah, can't forget about the global scene. Remember, markets are all connected.
Right, what happens over there affects us over here.
Exactly. So, while the U.S. market was having a pretty good Tuesday,
Hmm.
the Eurozone, not so much.
Oh,
They released their PMI data.
hold on, back up. PMI data. Remind me what that is again?
Sure, the Purchasing Managers Index, it's basically a survey of businesses, in manufacturing and services.
Okay.
It tells us if the economy is growing or shrinking.
So like a health checkup for the economy.
Pretty much. A reading above 50 means things are growing, below 50, not so good.
So what did the Eurozone score?
Well, it came in below 50.
Oh,
Yeah, means their economy is actually contracting
not good.
and their manufacturing activity still declining.
So they might be heading for a recession.
It's definitely a possibility. And you know what that means.
Trouble for everyone.
Potentially, yeah. Global trade, investment, it can all be affected.
So even though things seemed kind of upbeat here in the U.S.,
Doesn't mean we're out of the woods yet.
got to keep an eye on the whole world, huh?
The whole chessboard, that's right. And speaking of things to watch,
Yummy.
the tech giants are stepping up to the plate next week.
Earnings reports.
Oh, yeah, the big ones. Apple, Microsoft, Amazon.
The Magnificent Seven, huh?
That's right. They've been doing pretty well this year, but
Right.
some analysts are getting a little nervous.
What are they thinking, tech's going to crash?
Not necessarily crash, but maybe, slow down a bit. Like level off after all those crazy games.
Exactly. It's like imagine a rocket launching into space.
Powerful takeoff.
Right. But then as it gets higher, it kind of levels out, finds its cruising altitude.
So they think tech might be reaching that point.
Some analysts think so. It'll be interesting to see how it plays out.
So are we in for another wild week with these tech earnings coming out?
Oh, for sure. It's always exciting to see how those big players perform. Investors are going to be glued to their screens, that's for sure.
Makes you want to grab some popcorn, right?
Oh,
Watch the drama unfold.
absolutely.
Yeah.
It's a high-stakes game, and these companies are under the microscope.
You got to prove they're worth all the hype.
Exactly. It's like their big moment to show everyone what they've got.
And for those of us following along, it's like a crash course in, I don't know, understanding how the market really works.
I love that. A crash course in all the forces that shape the market, yeah.
Right. We see how company performance and investor feelings and like the whole global picture all kind of comes together.
All connected, for sure. So for investors out there, what's the big takeaway from all this? What should we be focusing on?
Well, I think Tuesday showed us something really important. Even with all the craziness, the ups and downs, the mixed signals.
There are still opportunities out there.
Absolutely. Tesla's surge is a perfect example. But the key is you got to stay informed, keep learning, keep your eye on the ball.
Knowledge is power, right?
Especially in the market. You got to understand what's driving those market movements if you want to make smart decisions.
So true. And speaking of knowledge, what sectors or companies are you personally keeping an eye on as earnings season rolls on? Anything caught your interest?
Good question. I'm really intrigued by the whole AI space.
AI, yeah, everyone's talking about it.
It's got so much potential, but there are still a lot of questions about how it'll all play out in the long run.
The story's still being written, huh?
Exactly. It's going to be fascinating to see how it all unfolds.
Well, you mentioned IBM earlier
Hmm.
and how their performance was kind of tied to those AI expectations. That definitely made me think. It makes you wonder if other companies are facing that same pressure.
It's a good reminder that not all companies are created equal, even in a hot sector like AI.
Got to do your research, right?
Always. That's how you make informed decisions.
Well said. This has been a fantastic deep dive. Really appreciate your insights.
My pleasure. Always happy to break it all down.
And for everyone listening, we hope this deep dive has given you some food for thought as you navigate the market.
Definitely.
Remember, the market is always changing.
Always.
So stay curious, stay informed, and keep on learning.
Couldn't have said it better myself.